Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Wednesday, the 8th of May 2024. So before we jump straight into our Daily Dose of Market Insights, let's take a look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook of the broad-based cross-asset classes, that means i.e. ranging from the major stock indices, the major FX pairs, two key commodities market, export gold XAU/USD, and as well as West Texas crude oil, let's have a recap on what happened overnight in terms of this cross-asset performance in relation to their respective key data, economic data, and as well as key event. So let's start with the FX market first. So over here, the FX market, what we could see over here is on my screen, we do see a broad-based dollar strength minor recovery. So this is the 5-day rolling performance of the US dollar against the major currency as of 8th of May, pardon me, right now as we are speaking. So a very strong uptick on the dollar against the rest of the major pair. The dollar that is outperforming against the sterling, the yen, the CAD, and as well as the CNH, all these 1, 2, 3, 4 pair is trading above the dollar index. So what we could see over here is last 3 sessions of dollar weakness, especially ex-post FOMC and ex-post non-farm payroll data, more or less has been pared back. All right, so but that came within our expectation. So for those who follow our daily dose of market insights since Monday, we do expect this kind of short-term minor dollar recovery from here. And where do we go from here? Later I'll share you during the FX, the short-term technical outlook on the major FX pair. And one of the particular pair that is most prominent that I want to highlight is against the Aussie, the dollar against the Aussie. So what is to see over here is that the dollar has started to actually recovered some of its weakness against the Aussie dollar. And in the last week or so, the Aussie dollar has been primarily riding on the coattails of number one, very strong up movement in the China related stock market due to we call it a more encouraging sign that the government official, the top policy makers in China may start to enact more I will say that more forceful piecemeal fiscal policy. And also yesterday we do have RBA meeting, and during the ahead of the RBA meeting, there's a lot of chatter in the social media stating that the RBA monetary policy statement will be much more peppered with much more hawkish vibes, but that actually didn't turn out as expected. So I actually highlighted this as well in yesterday's daily dose that if the monetary policy statement is not as hawkish as anticipated, there could be a minor sell-off in the Aussie dollar right exactly at the resistance level, which actually it indeed play out as expected. So now this RBA yesterday, we in market expecting, they held the key policy rate unchanged at 4.35% for the fourth straight meeting. So that's close to a 12-year high. But in that particular statement, because they don't really stop plot like the Fed do. What stop plot is projected policy rate down the line. They don't do that. So during the what market could gauge is actually through the tonality of their monetary policy statement and as well as the press conference from the RBA governor that's out 1 hour later. So what the statement over here is more like a neutral policy bias. All right. So that's nothing nothing, what you call it, nothing out of the blue. And also he during the press conference, Governor Michelle Bullock, all right, he said that the most recent data reinforced that we must going to be vigilant about continued risk of high inflation. So that is also nothing surprising as well. So there's no clear indication that the next step for RBA is to hike interest rate. So they offered a much more hawkish, yes, it's much more hawkish tilt. They're still concerned about elevated inflation, but there is no clear guidance that the next meeting or the next two meeting down the road is a policy interest rate hike. So that actually explained to us is that what I call that that highly anticipated push up in the Aussie dollar ahead of the RBA meeting has more or less been priced into the market. And one, there's no surprising hawkish, ultra hawkish tilt from the monetary policy statement, and as well as after the press conference, as indicated by the RBA governor, this is where we start to see that profit taking coming in the Aussie dollar. And for those who actually came in late into the market, got their potential stop loss being triggered, so we start to see that potential push down, okay, going into the session, okay, from yesterday Asia session throughout the European session. And one thing I want to highlight over here is that the dollar index, like I did mention over here, is that also due to all these kind of factors that is supporting the strong dollar, it actually gathered momentum as well. So the dollar index, like I said on Monday, the key levels to watch out for will be at this 104.20, 104.90, which is right exactly at the 50-day moving average. And right at the 50-day moving average, there's actually a bullish reversal candlestick that's been formed on Friday, despite the fact that there was a sell-off throughout the US session. But towards the close of the US session, it formed a daily bullish hammer candlestick, followed by a doji candlestick on Monday, indicating to us that the selling pressure and ease off, and that indeed actually have a positive follow through on Tuesday, which is yesterday as well, and today Asia session another push up. All right, so what we could see over here is that technical factors has already starts to turn positive earlier on Friday, late Friday. So that actually all cascade down to this potential positive feedback loop that has been accumulating in the FX market in favor of that minor dollar strength recovery story that is playing out right now as we speak. All right, so this is how everything comes in together: technical, followed by news flow, followed by event. All right, then with that, with the dollar strength coming back into the picture, that also caused a bit of we call it profit taking to come back into the US major stock indices. So for the US major stock indices, what we could see yesterday, we do see a late session sell off on the S&P 500. It came down, very similar to the Nasdaq as well. That's actually a sell off as well during the later part of this session, and very similar on the Dow Jones Industrial Average. Okay, so this is the intraday chart. Yeah, so there was actually a late session sell-off as well. Okay, so all in all, right, what we could see over here is a rather profit-taking session during the later part of yesterday US session among the major US stock indices. So at the end of the US session, I would say it's a profit taking session because of the intraday movement of the chart that I flashed earlier. So by the end of the US session, the SPX, yes, it gained positive 0.13%, but almost unchanged on the Nasdaq 100. The Dow Jones Industrial Average almost unchanged. The Russell 2000, a slight gain of positive 0.2%. And the worst drag that causes this profit taking a session to actually take shape has been inflicted on the mega cap stock, the 7 mega cap stock. Microsoft down negative 1%. In fact, two of them, okay, and Nvidia down negative 1.72%, and followed by Tesla down negative 4% almost. All right. So what we could see over here is three of these mega cap stocks actually causes this negative feedback loop to be inflicted among the major US stock indices throughout the second half of the US session yesterday. So that is also gel in line with that dollar strength recovery price action that has taken shape yesterday as well. Okay, now the next step over here is one thing that the markets now has been trading in this synchronization mode among the major US stock indices is due to the pace of monetary policy among them. So in terms of monetary policy, the ECB is still in the mode of cutting rates much earlier than the US Federal Reserve. That means markets expecting them to cut in either the summer months of this year, June or July. So cutting interest rate means putting in extra liquidity into the Eurozone. So that actually boils pretty well for the European stock indices. So we see a very strong push up in the German 30 index, which is the German DAX, breaking above that symmetrical triangle range top and actually outperformed the US stock indices yesterday. So if you look at the German index yesterday, it gained 1.4%, okay, breaking above the 18,160 level. So we got to respect the price action, and also potentially going forward in the next coming months, we also expect to see this kind of desynchronization movement among the major US stock indices and the rest of the world. Why? Because monetary policy among the developed nation is actually not going in line together. That means the Europe and as well as potentially BOE as we speak tomorrow. I will highlight tomorrow there will be a Bank of England meeting, because inflationary we call it a trend in Europe and in UK seems to be not as sticky as in the US. That means i.e. their respective central bank is jumping the gun ahead of the Fed in terms of the easing cycle. So that could actually explain to us why the European markets could potentially outperform the US market going the month forward, and potentially also in Hong Kong and China as well, due to that much more aggressive piecemeal fiscal stimulus the China policy makers are about to enact. Okay, so what do I mean by that? Yesterday, we do see this news flow data that is actually supporting the China stock market on the bullish side of the story. Okay, let me highlight to you all. Is this over here? Okay. Okay, so China actually now offers cash for urban revive. So they're actually trying to test new ways to boost growth in this ongoing deflationary risk spiral that is being inflicted by their lackluster property market. So infrastructure growth, I would say. So they're now going to inject billion of yuan, that means directly to government, provisional government, to actually re-renovate rundown public buildings and upgrade infrastructure, not directly to the housing market, but more on public infrastructure instead. So it's also considered as a form of physical stimulus policy, more on the measured side of the thing. But that also definitely we start to see a boost to China GDP growth, and eventually it could actually trickle down to the local stock market as well. So that actually explains to us why the Hang Seng Index has been pretty much resilient in the couple of days. All right. Okay, so with that, right, these are the key data that I like to highlight to you in terms of the intermarket correlation, and how do I look at things from a fundamental and as well as from a technical perspective. So with that, now let us now jump straight into that short-term technical outlook. Okay, starting with the FX market first. So over here, the FX market, like I mentioned earlier on, if you look at the 5-day rolling performance again, the dollar strength story seems to be coming back in the picture, at least from a short-term perspective. That means across the board, we do see a dollar strength revival. So let us start with the European currency first. So from the European currency, the sterling dollar is one of the weakest pair against the euro, against the dollar. Why? By looking at this 5-day rolling performance chart, the dollar is the strongest against the sterling right now. Okay, and outperforming the general dollar index, okay, in black. Okay, so with that, for those who actually follow our daily dose market insight, we do have a short-term bearish bias on the sterling dollar since the start of this week, or even since the start of last week, late last week. Okay, so before that, let me expand my screen so that you guys could see. Okay, so with that, the sterling dollar came down as expected. So what we're going to do over here is right now, it actually came down and now about to test the first support at 124.60. So with that, we'll be having a tighter key short-term pivotal resistance for today at 1.2565, which is yesterday's swing high, and as well as correspond to this minor descending trend line resistance that I drew from the high of 8th of March. So as long as 1.2565 key short-term pivotal resistance hold, the tightened one, there could be a potential bounce coming into play. Why? Because of the RSI, the hourly RSI has really hit the oversold region. First resistance to watch for this bounce will be at 125.40, but I don't want to put it so tight at 125.40 just in case of any whipsaw. 125.65 will be my tighten key short-term pivotal resistance. As long as any bounce didn't surpass 1.2565, still maintain that short-term bearish bias on the sterling dollar. First support 124.60, no change. A break below 124.60 exposes the next near-term support at 123.90. Only an hourly close above 125.65 will invalidate this short-term bearish bias to see another round of choppy corrective rebound up move to retest last Friday's swing high area at 126.40. Above 126.40 exposes 127.10, which is the minor swing high area of 9th of April and 10th of April. The euro dollar doesn't move as much as the sterling dollar in terms of weakness, but continue to inch downwards and broke below the near-term support level of 1075. So I don't want to use 1.075 too tight as my short-term pivotal resistance for today. Still use 1.08 level, which is confluencing with the 20-day and the 50-day moving average. So as long as any potential bounce didn't surpass 1.08 short-term pivotal resistance, still maintain that short-term bearish bias on the euro dollar. First support level to watch 1.0730, a break below 1.0730 exposes 1.0680. Only an hourly close above 1.08 invalidate this short-term bearish bias to see the continuation of this rebound to expose the next intermediate resistance level at 1.0850 and 1.0880 next. All right, which is the minor swing high of 9th of April. Asia Pacific currency, let's start with the Aussie dollar. So Aussie dollar came down as expected and hit the first support level at 1.06575. Right now it's testing this level, so I don't want to tight the pivotal resistance. So I still maintain, and that is yesterday's key level where it rejected off right after the RBA meeting and inch much lower. So 66.45 for sure will be a key short-term pivotal resistance level to watch to maintain this short-term bearish bias intact on the Aussie dollar. After 65.75, it may expose the next near-term support level at 65.20. So what 65.20? 65.20 is actually conversing with the minor ascending channel support that I drew from the low of 19th of April, and as well confluencing with the 50-day and the 200-day moving average as well. Below 65.20 exposes the previous minor swing low area of 1st of May at 64.65. Let me write down here. 0.6465. Okay, only an hourly close back above 66.45 will negate this bullish bearish tone to see the continuation of this rebound within its long-term complex sideways range, medium-term symmetrical triangle range configuration for the next resistance to come in at 66.80. Above it sees the upper limit of the medium-term symmetrical triangle range resistance, which is the medium-term pivotal resistance at 67.30. So what do I mean by this? If you look at the daily chart over here, it has been trading within this medium-term symmetrical triangle range configuration since the low of 13th of October last year. All right, so now the upper limit of the symmetrical triangle range configuration is at 67.30, lower limit 63.40. So it has been actually right now it's been non-trending, all right, within this symmetrical triangle range configuration. So that's why we see prices on the Aussie dollar get pretty much whipsawish in the last few days because there's no trend at all, no clear trending phase at all. Okay, That means there's no clear uptrend or downtrend. It's been consolidating within this medium-term symmetrical triangle range configuration, as you see on my screen here on the daily chart of the Aussie dollar since 13th of October last year. Dollar yen. So dollar yen, despite the fact that the top Japanese regulators are actually watching the yen weakness, but we can't still ignore the fact the trend of the dollar yen is still bullish. Why? Because after the retest on the 50-day moving average, which is close to the former bullish breakout level at 102 figure level, this strong rebound here indicate to us that the medium-term uptrend of the dollar yen is still pretty much intact. All right, this is the daily chart. So with that, no change. We still maintain that bullish bias on the dollar yen over here. So with that, first support level to watch out for today will be at yesterday's minor swing low at 103.90. But I don't put it at 103.90. It's a bit tight. Okay, so what I'm going to do over here is I will tighten the key short-term support to 103.90. Okay, so that's yesterday's 103.90. So this will be 103.90. Okay. Okay, 103.90 will be my Titan key short-term support because it's already reintegrate back above the 20-day moving average. So as long as 103.90 holds, Titan key short-term pivotal support level on the dollar yen to maintain that short-term bullish bias. Next resistance to watch out for sure 1560, followed by 1570, this congestion area here at the psychological level. And if you do the Fibo retracement of that entire sell-off recently, it's actually confluence with the golden ratio of 61.8%. All right. So with that, however, if we start to see a breakdown below this 103.90, then this short-term bullish bias will be in jeopardy. To see a kind of choppy corrective pullback movement extension to retest 153.30, a breakdown below 153.30 exposes another test on the 50-day moving average, which is coming to act as a support at around 151.60 slash 152 figure level. Okay, so that's for the dollar yen. So all in all, among the short-term technical outlook on the major FX pair, we still see positive technical elements on the shorter term to support this ongoing potential dollar strength minor recovery scenario to take shape. Now, as we explained earlier on at the start of the daily dose, right now we do see a bit of desynchronization amongst central bankers. So that actually kind of give rise to this kind of mixed element in the major stock indices from a short-term perspective as well. So for the Japan 225 or the Nikkei 225, we are still expecting it to be trapped inside this very complex sideways range configuration since the low of 19 April. So yesterday it did a reaction of the 13,800, 38,930 short-term pivotal resistance. We also confluence with the minor descending trend line from the high of 22nd of April, and it inched downwards, and right now it broke below the first support level at 38,320, trying to reintegrate back below the 20-day moving average. So with that, right, I will be more from a risk management perspective, will be more prudent. So I will actually have a Titan key short-term pivotal resistance right now based on this breakdown level here. Okay, 38,610 level. Okay, let me put it again. 38,610. Okay. Okay, 38,610. So as long as any bounce, because this level considered has been taken out already. Okay, so as long as any bounce didn't surpass above 38,610, we will still maintain that short-term bearish bias within this complex short-term range G scenario on the Japan 225. Next support level to watch will be at 38,010, followed by 37,680. level, maximum 37,070, which is the lower limit of this complex range. Only hourly close back above 38,610 will negate this short-term bearish bias within this complex minor range configuration scenario to potentially see a push up to retest this week minor swing, this week high currently at 38,930/38,130, which confluencing with the 50-day moving average, as well as acting as a resistance at 39,130. All right, so that's for the Japan 2-5. Still maintain that short-term bearish bias within its minor complex range configuration. Then this is the Hong Kong 33 or the Hang Seng Index. So the Hang Seng Index appears to be trapped right now within this sideways range, can't go down, can't break below last Monday low. So with that, right, it seems to us that it's trying to actually involve within this minor ascending channel support, and price action managed to stage a bounce in today's Asia session. And right now it's just trading sideways again. And with that, it seems like there's actually a breakout, a current breakout. There is a retest of this minor trend line resistance, now turns into a pullback support level. So with that, right, potentially this Hong Kong 33 over here seems to be trading within this sideways range configuration. So I'll be within this sideways bullish pennant configuration over here. Okay, so this is something like a bullish pennant. Okay, within its minor uptrend phase. So with that, right, I will flip to a bullish bias using a very tight key short-term pivotal support level at 18,380 level, slightly below the low of that slightly below the low of the symmetrical triangle boundary and the lower limit, and slightly below the lower limit of this minor ascending channel support level, because I don't want to put it so tight at 38,465. Give you a bit of breathing space. The swing low of last Friday swing low at 18,380. So this will be my short-term pivotal support level. A breakout above 18,800, which was this week level, to maintain that bearish push down towards 18,000 level / 17,900, but it doesn't seem to be taking shape right now given the formation of this potential bullish pennant, all right, that has taken shape since the start of this week. So this will be my upside trigger level. A break above 18,800 will kind of increase the odds to continue this minor bullish impulsive up move on the Hong Kong 33, which is i.e. the Hang Seng Index. Next resistance level to watch will be at 19,390, which is the upper limit of this minor ascending channel, and the 1.382 Fibo extension level that I drew from the low of 22nd of January. And if you go back 19,390, graphically is at this level as well. Okay, this minor congestion area of 7th of August and 10th of August last year. All right, so given the current positive element that has been taken shape in the Hong Kong 33 index, I'll be flipping to a short-term bullish bias as long as 18,380 short-term pivotal support holds. However, if you see a breakdown below 18,380, then it may transform into a minor corrective decline scenario towards the next support level at 18,000/17,900 and 17,600. If you do the Fibo retracement of this current impulsive up move, it's exactly at the 23.6% and close to the 38.8% Fibo retracement. Okay, so that's for the Hong Kong 33. Then you see the German 30. Yesterday, it did that bullish breakout above the short-term pivotal resistance that we highlighted, 18,310. Okay, so this is a breakout of a symmetrical triangle range configuration, a clear breakout. RSI now is at overbought level already, so potentially there could be a minor pullback taking shape today. No bearish divergence. That means I do not expect this minor pullback to transform it into a very, very steep corrective pullback instead. So minor pullback support level to watch. First level will be at 18,400 for sure. This minor swing high, former minor swing high 8th of April. And the key support level to watch for today will be the breakout level at 18,310. So as long as this pullback didn't surpass or reintegrate back below the 18,310 level, which is the pivotal support for today, potentially the German 30 could continue this bullish breakout impulsive up move. Next resistance to test for sure will be the current all-time high area at 18,620 level. This is the current all-time high area. 28th of March and 2nd of April, 18,620. Above 18,620 exposes 18,710, 18,770, which is the one-time Fibo extension level. All right, over here. So, and as well, if we do the channel, okay, it's also the top of the channel as well. Okay, close to the top of the channel limit. Okay, so that's for the German 30 index. Only an hourly close below 18,310 will invalidate this bullish breakout to see another messy movement of corrective pullback. That means it's a very it's a complex range configuration again. Next support level to watch 18,150, which is the lower limit of this minor ascending channel, followed by 18,030, which is close to the 20-day moving average, I think, as a support level as well. Okay, so that's for the German 30. Then you have the Wall Street index. Okay, so Wall Street index, this bearish divergence is going to play out. So yesterday it continued to trade sideways below the 39,050 short-term pivotal support level. So still no change, still expecting at least a minor pullback to take shape on the US Wall Street 30 in the first step. First support level to watch will be at 38,560 level. Only a break below 38,560 potentially exposes the next support level at 38,310, which is the former minor swing high of 2nd of May, and the 20-day moving average also acting as a support close to this 38,330. Only an hourly close above 29,050 will invalidate this short-term pullback scenario on the US Wall Street 30 to kickstart a very potential strong impulsive up move. That means, i.e., it could be the start of a new up leg to test new fresh all-time high. All right. Next level after 39,050 will be at 39,380, followed by 39,775 resistance level on the US Wall Street 30. Then you have the Nasdaq 100. So Nasdaq 100 also right now continue to actually push up, and that sell off during the later part of the US session actually took shape right exactly below the 18,180 short-term pivotal resistance that we highlighted, which is also confluence with the minor descending trend line from the all-time high of 21st of March. And what's interesting over here is that the RSI also has started to shape that bearish divergence, all right, indicating to us that the upside momentum has started to ease off as well, giving us much more prudence for at least a minor pullback scenario in the first step on the US Nasdaq 100 to take shape. So with that, maintain that short-term bearish bias for that potential short-term pullback scenario on the US Nasdaq 100 in the first step, taking things one step at a time. First support level to watch will be at 17,940. Previously was the 50-day moving average as a resistance, now turns into a pullback support. A break below 17,940 exposes the next support area at 17,810, which is the former minor swing high area of 29th of April and 30th of April. Only an hourly close above 18,180 will invalidate this minor corrective pullback scenario to potentially kickstart a fresh new impulsive up move, where potentially the Nasdaq 100 could now be evolving in a medium-term uptrend phase to take it up to fresh all-time high again. So, but unless we see an hourly break above the 18,180 level, then next resistance to watch out for will be 18,380, then followed by the all-time high area at 18,500 in the first step. So that's for the Nasdaq 100. So to sum up, the major stock indices is now trading within its own individual short-term technical configuration, these synchronized movement among themselves. All right. Now, spot gold. Okay, for spot gold, no change. It continue to trade above the pivotal support level, which is the 2,265, 2,260. Okay, no change. So price action now trying to bounce off again from here, today's Asia session, and also the momentum, the RSI continue to seems to be remains on its support level as well. Okay, so with that, first support level 2,290 range, 2,300 level over this level. Okay, but I don't want to put it so tight, so this will be like my first support because it's still hovering inside this kind of sideways range, but this sideways range has now transformed into a impending bullish descending ridge. Okay, indicating to us that it's more like a bullish consolidation formation. because of a descending wedge, because the momentum, the slope of the lower low is less steep than the slope of the lower high. Okay, indicating to us that downside momentum has eased off as well, but it got to break above the 2365 level, or 2350, 2365, the upper limit, which is this very clear congestion area over here, before indicating to us a much more strong, forceful recovery scenario coming into play for spot gold XAU/USD. So still no change, still using the lower limit of this descending wedge configuration, 2265/2260 pivotal support level. Breakout above 2365 will increase the odds of this recovery scenario for spot gold XAU/USD. Next resistance to watch out for will be at 2004.20, which is the minor swing high of 12th of April and 19th of April. Only hourly close below 2260 will invalidate this recovery scenario to see the extension of this corrective decline scenario to unfold. Next support level to watch will be at 2235, 2210 level. Then what's next for WTI crude? So WTI crude continue to play around that pivotal support at 78.40. So what 78.40 is actually right exactly at the lower limit of this medium-term ascending channel that I drew from the low of 13th of December last year. Okay, so yesterday is try to form another we call it doji candlestick, indicating to us that the selling the bearish momentum seems to be plateauing. And what's interesting, if you look at the hourly RSI, the continue to form higher lower. Okay, that means the bullish divergence is still intact, indicating to us that the downside momentum seems to be easing off. So with that, right, no change, 78.40 medium-term pivotal support level, but it got to break out above yesterday's minor swing high area, which is confluencing to this Monday swing high area as well as 79.40. Only a break above 79.40 will increase the odds of this short-term recovery scenario in first step. Next resistance to a level to watch will be at 80.80, which is close to the 200-day moving average, I think, as a resistance as well. However, if we start to see a breakdown below 78.40, then this short-term recovery scenario will be in jeopardy to expose the next near-term support area at 76.90, 75.50, this graphical support zone over here. All right, so that's pretty much sum up for the short-term technical outlook for today. And now let's take a look at the economic calendar. What are the key data to look out for today? So today will be a rather quiet day, so nothing much important to look out for, even during the US, during the Asia session. And one key economic data to look out for will be the industrial production month-on-month for Germany. That will be out at 2 p.m. Singapore time. That could impact the German DAX. Then followed by the US session over here, nothing much except for the one that is the EIA weekly crude oil stockpile data that could impact the WTI oil price. So that is out at 10:30 p.m. So market is expecting another build up of 7.265 million. So it became within expectation. That means there's an increase in inventory. So an increase in inventory potentially could actually support WTI crude oil prices from going lower potentially. So something to look out for as well at 10:30 p.m. Singapore time. Then thereafter, we do have two federal officers speaking. Fed Jefferson at 11 p.m. Singapore time, followed by 11:45 p.m. Singapore time, Fed Collins that's speaking. Yeah, so talking about Fed speak, yesterday there's a Federal Reserve official. Before I forgot to highlight at the start. So Fed Kashkari, he's a voting member this year. So he did mention that rates are likely on hold for an extended period. So Fed Kashkari is one of the more hawkish or less dovish Federal Reserve official within the voting committee. So he expect for the extended period of time. And he also did mention that persistent housing inflation is a potential indicator that will keep the neutral interest rate higher in the shorter term. All right. And he also means that the Fed has much more work to do to cool inflation. So he's more sitting towards the less dovish camp over here. So overall, based on this latest Fed speak official over here, is that there could be still a risk that we could only start to see one interest rate cut in 2024 in the US economy, or potentially no interest rate cut at all if inflation in US continue to be as elevated as what being highlighted by these Federal Reserve officials. All right, so something to watch out for as we look out for another two official that is speaking today, which is Jefferson and Collins at 11 p.m. and 11:45 p.m. Singapore time. Oh, and we do have another one at 1:30 a.m. Okay, Fed could speaking. Okay, so a slew of Federal Reserve officials speaking today that could sway the market movement. Okay, now early morning Asia time tomorrow, we do have a Bank of Japan summary of opinion. So this is more like the minutes for the previous BOJ meeting. Sometimes you look out for among the thinking of the Bank of Japan officials, especially on the weak yen that could impact imported inflation. 7:50 a.m. Singapore time tomorrow before the start of our daily dose. So that is Thursday, and thereafter, right at our start of daily dose, we do have China data, key important data, which is the balance of trade. So market is actually expecting a better recovery in both the export and as well as import figures. So something to look out for as well for tomorrow. Okay, so with that, that pretty much sum up for today's daily dose of market insights. So I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.